Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Tuesday, and the markets pulled back throughout the day, but it does look like, it does look like we may be getting update tomorrow. It's just really tough to tell. Interestingly enough, we did kind of get a little bit of a floor. It looks like on the price of oil, it was up about 0.5%, not a lot. 73.20 is the price for the West Texas Intermediate. Now, here's the thing. You probably realize that Occidental Petroleum went up heavily today, and this was basically based on the loan, I think, that was converted by Warren Buffett. Um, and it does look like he is making a big move into that area of the market, and this may be giving us a buying opportunity. Who knows? On Oxy, as you could see, it came right up to the 50-day line. Had been in a downward trend. I don't think it's still broken trend, but it's getting darn close, and that might be an indication that we're going to see, at least unfortunately, probably in the summer, we're going to be seeing some oil price inflation. Typically, the price of oil does go up in the summer due to the driving season, but it has been lower because of and it's not my drawing right there, but it has been lower. But it definitely looks like we're starting to see some strength come into the oil sector. This is Occidental Petroleum. OXY. It has a 66 relative strength. I want to take a look at the kind of compare this with the overall XLE, which is the Energy Select Spider for the energy sector, Oxy and that one. So let's just see if I can put this up there. Since the first of the year, let's see, and let's put in XLE, which is the yeah, okay. And the Oxy is outperforming, yeah, outperforming a little bit the XLE. So let's get that chart up here just real quick so we can kind of see where that's going. And then click on over here for everybody watching on TikTok so you can kind of see this chart. Let's see if we can get that in there for everybody. All right, there we go. And basically what this is here is that this is a chart since the first of the year of the XLE, which is the Energy Select Spider. It's basically the oil and gas sector, and then we have Occidental Petroleum, which is outperforming actually. Now, here's the thing: since the first of the year, the oil sector has been underperforming the market. If you bought $1's worth of Occidental, you would have had $1 today. So that's performing at basically at the market. And then you have the XLE, which has been underperforming the market. Now, I do believe that we're going to see a shift here with the price of oil likely to go higher, just because it has moved down. It's at sort of at the bottom of a consolidation, and I do think that we're likely to see it move. We're likely to see it move higher in the next few days. So, very interesting. Mostly, I'm in cash right now, which is not the most exciting place to be. But we are still in a correction. The market is in a correction. So, when the market is in a correction, we want to be very lightly invested, preferably, if we can, stay mostly in cash. I would say above 50% in cash. That's probably your best bet at this low time. I am actually more than 100% in cash because I'm short, and I'll show you which ones I am short currently. I did short the XLF on Friday. That is the Energy Select Spider for financials, mainly due to the issues with the banking sector. That one was down, but just very, very slightly, only about 3 cents. So not really, pretty much stayed the same. I did short Nike today. Nike has been very, very weak. after earnings. So we'll see what happens there. But it was up a little bit today, so I kind of misjudged that. Now I did make, I think, a pretty good call today on Celsius Beverage. It's called Celsius Holdings. Symbol on this one is CELH. It was down. It was down basically over 3% today, and I do think it's going lower. So let's take a look at that chart just real quick, um, and see if there's any opportunities here, possibly to short it. This is what. Okay, let's pull on over there. Yep, let me pull it over to the chart here and see if I can get that up for everyone. And this is a chart of Celsius Beverage, and basically these are the people that make the fat burning drink. It's been very popular. Now it actually, believe it or not, we hit our all time high basically back here in November of last year. Then it came back up to 116, and it's unfortunately it's been on a downward trend ever since. It's sort of bottomed at about 80.25, and currently the stock is at 89. Now what I did is when it came up to that 50-day line, that is where I did short it. And part of the reason, of course, is it just the relative strength is deteriorating on this one, and it does appear that this one might be going lower. So it definitely did go lower today. So we'll see what happens. Basically, my short was basically right about here when it broke below about 92. That's where I was short the stock. So this one you might want to take a look at. I definitely think we're going to go lower on this one. No guarantees in this world, but I definitely think this one is weaker, and I think it is going to go lower. So that's one that I wanted to highlight that I did short. And I also have been short, of course, Nike. Now I didn't quite time that one as well. That's of course NKE. They just came through earnings, and it does look like. Oops. Let's see if we can get that in there. NKE is the symbol for Nike, and of course it's. Um, all right, there we go. There is Nike. So let's pull that up on the screen. And basically, what happened is we broke support here at the 200 of the 200-day line. It's up a little bit after hours to 118, but I definitely think that's short lived. I think we're going to go lower with Nike. This was the action on the 60-minute chart. You can see it's pretty much down, and then we rallied a little bit here. That's where my short was about 117. 25 right there, and then I think that we probably see a little bit of more action lower, but I definitely think that the downward action is definitely there with Nike. So we shall see what happens with that stock. But interesting stock. Okay, well let's get to the questions. Thanks for holding on, everybody. So appreciate it. Hey Charles, let's look at the XLE. Great choice there. Of course, that's the Energy Select Spider, and that one has been kind of asleep for a while. I do think we're going to see it move higher. Because I do think we're going to come into the summer driving season. The refineries are starting to ramp up their production. Um, and, I do think that we may be in a situation where this is definitely viable. We're up and we're up after hours. So this is showing, at least for the time being, that we've got this nice, we've got this nice move up here. I definitely had an alert on this one. At about 82. Now I didn't take advantage of this. I didn't buy this one long. I was short today primarily, and not long. But this is looking very strong. So I think we may be back to this normal trend where we have weakness basically in everything but the oil sector. That's kind of what I'm seeing. And also, Charles, great. Thanks for bringing these two up. SLB and HAL. These are both oil service companies. One of course, used to be called Schlumberger, and the other one Halliburton, but very significant company. So let's look at Halliburton first. And see, I definitely think when you see these on an upward trend, and again, we have been in this downward trend for so long, and then I do think that it sort of has bottomed there, basically right at about 28. We're up to 31. I definitely think that we're going to see this move higher. Now, here's the thing, and this is one of the things I've had trouble with this year, is I don't particularly like buying anything below that 200-day line. And Halliburton definitely is below the 200-day line. So we shall see what happens here. But you know, I'm beginning to think that you could probably start putting a position in here. We still have, on the technicals, we're still pretty darn close to that 21-day line. We don't want to be too far below that or above that, but it's starting to look, fairly good for Halliburton. Let's take a look at Schlumberger SLB. Um, And I do think we're gonna get some investment in this area just because I do think that, yeah, and this is probably the better of the 2. If I were gonna invest in either of these, this would be the 2. Why? Mainly because Schlumberger is above that 200-day line, which is so important. Also on the technicals, we're extremely close to that, 21-day line at about 2%. So here's the thing, right now, this is looking fairly good. Now it does look like we've bottomed. Does look like the relative strength has bottomed and hopefully is moving higher. We'll see on this one. Again, still not really a great buying, still not really a great entry place here, just because it just really is not in a great pattern, and there's just a lot of reasons why this isn't particularly good. But out of these 2, I think would have to go with Schlumberger right now, in terms of in terms of the stock. It is little bit stronger. Let's see. I want to take a look and see what the number one area currently in the market is. I think it's still the semiconductors, but I just want to check that to make sure because it does change. This is the industry group rank. I typically like to look at the strongest sectors in the market. Okay, metal parts distributor. This really is only 3 people here, so not a really good. The fabless semiconductor still is the best sector. So if we're going to look for things to buy long, this is still probably where we should be kind of concentrating our search here. The strongest, of course, Nvidia. I broad Micron just reported, so that's looking fairly decent. So probably, looking at the leadership, I would say Nvidia is still the strongest, but I don't know if it's viable right now. Let's look at Nvidia real quick to see if we can get a buy point on that one. Hold on. Again, I am primarily I'm in cash and I'm short basically right now because the condition of the market. Um, we did move up. If we could buy that close to the 21-day line, that might be a place where we could possibly start sizing a position on Nvidia. But let's take a look at it. Yeah, we're 6% above. I think you need to wait for it to pull back a little bit, possibly to that 21-day line, which would be about 248 or so. So that's kind of where I think that you're going to be the best off if you're going to look at buying something long. And I think probably the leaders are the ones to buy. Relative strength on Nvidia is 98, so very very strong. Let's take a look at some of the people on TikTok. Baba, did you cover? Yeah, Baba was up tremendously today. I have any Chinese stocks currently, but it does look like the Chinese government is going to be less restrictive. They're sort of signaling that they're not going to, they had Jack Ma in jail for a while. He's the president of Alibaba. That has sort of been mitigated a little bit. It was up tremendously today, and the relative strength is starting to show strength. I'm still very leery about the stock, though, even though it did gap up nicely, so we can see. I'm just still very, very leery about it, but there was a lot of buying that came in to the issue. So somebody thinks that it's looking stronger. If we kind of look in the Wayback Machine, you can see we've really come down a lot since 2019. That really was where we peaked out, basically at $300 a share. Currently, it's trading at about 98. So it's about lost about 2/3 of its value uh, in the past. In the past 4 years, Alibaba's lost about 2/3 of its value. So something to be concerned with if you're looking to buy Chinese stocks. They just have slid a lot since 2019. So I am currently not in any of them. Did he cover it? I did not short. Okay. XLE. Yeah, the XLE is. I think that's probably the play right now. If you're going to go long, I think that's probably the play. And there's just a lot of reasons for it. I do think we're going to have a oil, not a shortage, but a constraint in oil coming into the summer. Now, here's the thing: because the economies have slowed so much in Europe, the demand for oil has actually been mitigated somewhat, just because they're literally paying incredible prices for diesel in Europe, and they're in a very big situation. So they're cutting back on their consumption tremendously. So that's one thing that we have to bring in here. Let's take a look at Ford and GM. I don't think either of these companies really are doing all that well. I think GM had a shutdown. The biggest problem that GM is having, I believe, is that there just simply are not enough buyers right now for the new cars in the market. As you can see, the trend on GM since about February has been lower. Okay, and they're beneath the 200-day moving average, so not a really good stock I think to be in right now. I'm not in it, and I also think Ford similar problems. Ford's running out of cash, and they were the only one of the big three that did not bankrupt way back in 2016. So they uh, they don't have a lot of cash on the books. The price of Ford right now, $11.58. Not a really good look there. It's below the 50-day line, the 200-day line. Basically, I'm afraid it's headed lower. And just par for the course for Ford. It's been a lot lower before. I mean, it literally has been back. 2008 Ford was all the way down below $2. So I don't know if that's going to happen. We're going to have a recession more than likely, and one of the things that's going to really suffer, I believe, is the car and truck sales. And of course, they're off. GM actually idled their production, so I just would not be in this stock. Would I short it here? No, not probably, because it's just such a not a it's just such a low price stock. I probably would not short it either. So neither I'm not bullish on either Ford um, nor GM, unfortunately. Thoughts on TLT? Okay, the TLT is interesting. It is a ETF, and it follows the long bond. It follows the 20 and the 30-year bond index. So this one has been has been rising a little bit, but it's still below the 200-day line. I don't know. I just don't like. I'm just not a fan of this. Now, preserving capital, you might want to look at a money market ETF or cash ETF. But this one, I just think there's so much weakness in the regional banks. Let's look at the KRE. I tried to short the KRE the other day, and I was restricted from doing this. There's a lot of reasons. They're not allowing people short regional bank stocks because, of course, the with this recession, I think there's going to be a withdrawal from many of these regional banks, and the money is going to go into the six largest banks. So the regional banks are under a lot of strain right now. Um, so I don't see I see the higher interest rates as being very negative for the regional banks because, of course, they're heavily invested in bonds, U.S. bonds that are trading, that are 2% coupons, and so whenever the interest rates goes up, the value of the bonds goes down, and that's what killed Silicon Valley Bank. So, uh, really a problem, really a problem. All right, let's look at ExxonMobil to 110. I like your thinking there, Charles. ExxonMobil, of course, you can almost buy the XLE because it really is mostly it, but I think that there's a very good chance that it will move up to 110. We definitely had a nice. It definitely tested below 100, but it definitely held, and it's moving up, and it's moving above that that 21-day line. The question is it a good place to buy it here? Well, we're right at the 21-day line, so this is not a bad place to actually start sizing a position in ExxonMobil. Here's the reason ExxonMobil probably will ride this out better than almost any stocks, many of the stocks out there, and that is the strength. The fundamental strength of the stock is tremendous. In the last quarter, when they announced their sales, overall sales were up 12%, which is amazing, but their profits quarter to quarter was up 56%. Now, of course, you have some lot of headwinds on this. California is trying to pass a special tax just on oil companies. I don't know if they can do it legally, but they're certainly trying because they're broke in California. I know because I'm from there. And but these oil companies, the ones that are well managed, and I think ExxonMobil has to be one of the best managers of all the oil companies. That's moving up, and I think it's very likely to go to 110. I agree with you, Charles. I really do. I agree, totally agree with you on that. I think you're absolutely right on the money at 110 for ExxonMobil. So I do like ExxonMobil a lot. There's two kind of old school stocks that I really like right now. Uh, Another one is GE, General Electric. That's another one that I really like. This was a very successful spinoff. GE is mainly becoming a aerospace company. That's really kind of what it is. Healthcare, of course, was spun off GE Healthcare, and also a few years ago, Agilent, which is their test equipment company, was spun off. For in full disclosure, I actually worked on that spin out of Agilent years ago in California. So a little bit of experience, a little bit of oh, that I'm sorry. Anyways, this is moving up very, very nicely, and so uh, GE right now, I think is worth looking at, and I also think ExxonMobil is. All right. Is the TBT following the TLT? The TBT is the inverse of the TLT, so it's kind of an odd ETF in that it's shorting, essentially it's shorting the bonds, and I think that this one is going to start to see a movement up as well. But again, um, not really a lot of movement on this one either. I mean, it's still in a downward trend. So, again, in terms of commenting on bonds, I mean, it's a lot of speculation on my part because basically bonds depend on what the Fed policy is, and of course, I'm not privy to the Fed policies. So, um, my guess is with bonds, we're going to see some more interest rate rises, even though the economy is starting to slow down and will move into recession. I think that's just par for the course. All right, let's look at GLD, gold miners, and this is the stock that is basically follows follows gold, and it's moving nicely. It does appear, due to the recession fears, that gold is getting a little bit of a bounce here. 183.50, and it is making a higher high. So I definitely like this. I definitely like this. It's starting to stack properly. 250, 21, 10. So that's looking very good. And then strong there. So let's pull up the chart. There we go. There we go. It's a marked up chart, as you can see. So quite a good one as well there. All right, this is probably going to be the last few here because we're almost out of time. What is the great? Oh, what a great flying W chart. GE, absolutely. Let's pull back to GE again. This actually, I really like this stock, and I have to be, kind of, yeah, kind of honest. I mean, uh, interestingly enough, I went to school with the CEO, um, Larry Culp. I went to Washington College undergraduate, and he's now the CEO. He's done good things with this company. He has been able to kind of turn it around and realize some of the value there by splitting out some of the um, by splitting it up. By splitting off the healthcare and then focusing on the aviation and defense. I think GE is a much stronger company, and I do think that this one going forward, even in a bad market, is likely to be a very good deal. Take a look at this: 97% in terms of relative strength. The relative strength line is moving up, so at least currently we have a very, very strong stock. And the question is, where can we buy it? We want to buy it as close to that 21-day line as possible. It's buyable here. So I do think long term GE might be a good one. As you can see, I've owned it several times, taken profits, and then bought it back. So I definitely like this stock a lot. All right. There's the price. Are shorts still going to be profitable? Shorts, if that goes to zero, then they aren't profitable. If the company goes back, you don't want to short something that's going to bankrupt, because then there's no reason to replace the shares. But shorts can be profitable. Typically, you want to short things that have been leaders and that are now potentially moving lower. This is one of the reasons why I shorted Celsius Beverage today, because it had been a leader and it's just been moving lower. So that's the reason I shorted it. It came right up to the 200-day line and it was rejected. Also, you'll notice that the 50-day line is almost touching the 200-day line. So I do expect this one to go lower. I suspect this is going to move down about 10 points. I'm probably going to hold it till it moves down and tests about 80, and then I will probably cover. But right now, I'm short Celsius Holdings, and I do think we'll see what happens in the after hours. It's down. It was down about 3% today on lower volume. So that does concern me a little bit. I want to see bigger volume, but if this thing gaps down, I will be a seller. But right now, I'm short Celsius Beverage. All right. Well, thank you very, very much, everybody. Oh, by the way, I wanted to show you, we're coming down to the last few days before the start of Gavin McMaster's course, Options Mastery course. I've taken this course. I think it's excellent. And if you really want to learn options, and options are great to trade in a market like we have, a very, very tough market to trade because it's basically going sideways. This course normally is $397, but now if you order through the site, it is $179. We have a special deal only for Dallas trading floor people. So basically, what this is, if you want to get the deal, go to https://stan.store/Dallas trading floor. Now, if you're watching this on TikTok, just go to the link in my bio, and you'll be able to click on that. This is a great course. If you've ever been interested in trading options, this is the course I think that you want to definitely take a look at, because it's very, very good. I bought this course last year. I did it, and it starts on the 31st. By the way, this is actually incorrect. The 30th. I'm sorry. So we only have 2 more days left to possibly get the course. So definitely want to take a look at it. Great course, and definitely worth doing something on. All right. Well, I'll be back tomorrow, hopefully at the same time, about 5 o'clock Central Time here in Dallas, Texas, and I'll be back with more stocks. Until then, everybody, please smash that like button. That helps us out so much. So smash that like button, and also, hit the if you're interested in the course, super duper easy. If you're watching on TikTok, all you have to do is go to the link in my bio. So go to my bio, click on the link, and you'll see the button for it. It's available for 2 more days we've got a sign up. So 2 more days that you can get the 179 price. But don't wait, because after that it will be the same. It'll go up to back up to the 397 price. So definitely something to do. All right, we have one last question. We have one last comment here for of course, start private stayed at Eastern time. Yeah, it's in the yeah, Charles, absolutely. The course is in the Eastern time zone. Yeah, the course is in the Eastern time zone. So depending on where you are, adjust your time to that. But it's a great course, and you'll definitely learn a ton of stuff. It's great for this kind of market too. So I'll be back tomorrow at 5. Thanks everybody. Thanks again for taking time out of your schedule. And please tell other people about the show if they're interested in trading stocks. I will see you tomorrow. Happy trading.